Hi, and welcome to Engineering My Money. Yes, I changed the name of the channel. I wanted to give it something a little bit more of what I do, which I'm an engineer. And what I do is I present the data, get the information, and then at the end of the day, you make the call. So today I want to talk a little bit about follow up on the last video, which was related to the history of the money and inflation. I do want to talk about inflation mostly, a little bit about the forbearance, a little bit about what's going on with quantitative easing and how that's going to affect the dollar. And at the end, I want to give a practical video, 3 minutes on how to buy physical gold and silver from a website. I'm not endorsing that website. I don't make any money off of it, but it's just a website that I use, and I found them to be very professional. So let's get started. Thanks. So I found this cool website where it has a lot of statistics, and you can see here first that the national debt is 27 trillion with the $T. Okay, and it's going up. You can see the real time. I don't know how accurate this information is, but the little I checked, it seemed pretty accurate. You can see like here, income coming from tax revenue is 1.5 trillion. Payroll and corporate, it seemed a little low, 174 billion. And then a lot of interesting numbers here. You can see how much is being paid in interest. Look, almost 4 billion paid in interest. Okay, that's a lot of money. And then you can see here the M2 money supply. Remember, this is the money, the near money, the money that's available quickly, like in a bank loan or under your mattress in your wallet. Okay, that's 18 billion dollars right there, trillion. I'm sorry. One interesting thing here to look at is that they have this. What would the gold cost if you take the gold production per year and the M2 money supply, and look at this. It would be almost $30,000 per ounce. Okay, so that's a lot of money. Really cool website, and they have other stuff here. I'm not making any money off of this. It's just pure information. If you want to go there to the website, it's called usdebitclock.org. Okay, they have some information here on gold and other things. Here you can see, what countries, how much gold they have, and other interesting information. Yeah. Okay. So in a healthy economy, what happens is that the central bank, okay, generates money and lends it over to the commercial banks, and the commercial banks would go out, and lend them out to industry, like to build an airport, factory, or increase production, hire other people, etc. So all that money would go out to build things and or hire people that would generate more money, more imports, would generate money moving around, that would generate more taxes in the form of employee taxes, or in the form of other types of taxes, and that'll go back to the government. So yes, you're generating money, but at the end of the day, that money is used to generate more money. So that's in a healthy economy. So what's happening today? Today, because of the pandemic and other situations, the money is being used, being generated, but for people to pay bills, for people to not fall behind on their loans, for companies to stay afloat, to pay their employees, or maybe just not shut down completely. So it's a different philosophy. The money is going out, but it's not being used to generate more income for the government. So that's when you get into these situations of high inflation. So what happens? So the central banks all around the world are doing the same thing, something called quantitative easing. Now, the textbook definition of that is a policy where the central banks buy government bonds or other financial assets in order to inject money into the economy to expand the economic activity. Okay. So remember that the Fed isn't owned by the government, right? It's a private institution. Okay. So the Fed buys assets. Okay. And what it does is lends money to the government, to the commercial banks at a low interest, to buy bonds, treasuries. Okay. But now they're also purchasing mortgages. Now, if you look at this website here, you're going to see that all the banks, most of the big banks around the world, doing the same thing. So the Fed's buying 41 billion in assets a day. Okay, that's crazy, some crazy money. So if we look at here, this graph is showing the red is going to be the Fed here in the U.S., And you can see that this year it just went up, exponential here. And you see that the Japan, Bank of Japan, and European banks, it's also going up in 2020, to some record levels. Now, one thing is that, for example, the central bank of Japan is owned by the government, so it's a little different. Here, we don't, the government doesn't own the Fed. So we have all the G7 also, like Bank of England, Bank of Canada, doing pretty much doing the same thing. So here they're saying that, G7, they purchased just in March, it got crazy, $1.4 trillion. Okay. So something never heard of. And, the article there continues to speak about this. So with this quantitative easing, a lot of times companies will get a loan, a very low interest loan. And what they're doing, a lot of them are just going out and buying their own stock. This way their stock goes up. Now, it's something that in the 1930s, part of the depression was because a lot of companies were doing this. Okay, and we see that today. All right, so they artificially increased their stock, right? And that might be part of what we're seeing right now. Okay, instead of saving the money for a rainy day, right? They know that the government will bail them out, just like they want to do with the airlines right now. Okay, so what happens? The stock market is reacting to the stimulus, and you see it. When there was bad news about the stimulus, the stock market would go down. When there was good news about the stimulus, it goes up. Why? Because they know that a lot of stimulus money is going to go end up buying these stocks and increasing the stocks. So if we go to this website here, the GDP, gross domestic product, we can see that we're in really bad shape. Q2 was actually negative 30. Now the GDP in the U.S. is mostly related to the commerce internally, money that moves around in sales and restaurants and things like that. So it's not looking good. And then on top of that, we have a lot of states looking to increase the minimum wage. Politicians like to do this. Hey, I want to give more money, but the reality is that the data shows that when you increase minimum wage, the inflation goes up. Why? Because there's a lot of labor intensive activities. For example, if McDonald's all of a sudden increases everybody to $15 an hour, then yeah, you would see an increase in the Happy Meal cost, and that goes across multiple industries. Now, of course, you don't want to leave the people behind. There is a sweet spot, right, to increase the minimum wage. But typically, these things will increase also the inflation. So yeah, the things like food and others will partially go up because of this, because they're a lot of these are labor intensive. Now, on top of that, we have a lot of small businesses going out, and we've already been hearing this, and these are the numbers. 7.5 million are at risk. Okay, and then if you continue seeing this article here, it actually says that 3.5 million of small businesses are permanently closed. So not good. And now, if we go to the housing market, and we see that there's over 4 million households on forbearance, which means they won't pay the loan for up to a year. And here you can see the breakdown by the different types of loans. So for a total of 4.1 million. Now this graph here is interesting because here shows the total at the top, and it shows that like in Aprilish is that when we started hitting the peak right here in May. So that means 1 year later, this peak here um, means that they're going to be the program is going to be over. So what's going to happen after that? If you don't have a job, then you're gonna lose your house. So hopefully that's not the case. Hopefully jobs will come back, but we don't know. So I'm looking a year from now, or in May of 2021. In a few months later, right, we might see, unfortunately, an influx of houses in the market. If you look now, it's crazy. There are no houses right now on the market. So if we see today, for example, in Florida, that there's nothing, there's no inventory. Most of the cities are like that right now. Of course, in New York, people are trying to leave the city, so it's probably a good time to buy there now. But like in Florida, there's nothing. A house comes out of the market, and it's quickly taken up. I put in a few my wife and I put in a few cash offers on some properties, and we weren't able to get them. So that's happening now here in Florida. Now I do think, like I said, a year from now, what's going to happen, plus minus a few months, there are going to be some houses in the market. Probably house prices will come down. It's probably a good time to buy. But I don't think that's going to last too long, because with all the investors trying to go in and buy houses to protect themselves against inflation by renting them out. And like I said in my previous video, if you don't own a house in a high inflation situation, you should look to buy a house, because rent will just keep going up every year, while your mortgage would stay the same year by year, and that'll put you in a more a better position. So the other piece of information is the government, right? The stimulus package. So yeah, there have been a lot of back and forth. That's why I haven't made another video on that, on the stimulus, because a lot of talking. Like there was this week, Trump wanted to get a standalone bill to help out the people, and Nancy Pelosi wanted to get one out for the airlines. Other companies, other sectors started to complain to Pelosi, and then she backed out on that, and now she just wants the airlines to be on the overall package. But bottom line is that Trump said he wanted more, actually more people, more money now for the people. They're talking about like $1,000 per child, where before it was 500. Then 1,200 per adult, where before it was like 1,200 per household. And now it'll be for each adult. So anyway, the bottom line is that they're getting closer to a deal. It's going to come out to be about $2 trillion. So at the ticker we saw, add another 2 trillion. So now we're talking almost $30 trillion. Okay, so what's going to happen? So regardless of the party, yeah, I do think there's going to be more quantitative easing that'll continue, more money printing, or whatever you want to call it, because eventually they want to get rid of the actual dollar and do it all completely digital. So that's another story. But that'll probably continue for a while, because of the whole effects of this whole pandemic on our economy. So I think regardless of the party, that'll continue to go on. Now, if Trump is president, then I think it'll be pretty much business as usual. Typically, the stock market will go down like the day of the elections. That's expected. I do think that the stock market is inflated, because of the reasons I've been talking about. I think it's at least 25% correction is coming. So who knows when that's going to happen? It's just a ticking bomb. But when it does happen, if you have the cash ready, you can go ahead and buy some nice stocks at a discount. So yeah, be ready for that. Now, what's going to happen if Biden wins? I think it's not a mystery to anybody. I think that some of the stocks will go down because of more regulations and more taxes, but others are going to go up, like Chinese company stocks, solar energy stocks, and those types of things. And I do think, if you look at the campaign, they'll probably grow the government a little bit, or a lot. I don't know, because of this green deal, or whatever you want to call it, where they're going to probably, again, create or money out of nothing, to do this type of thing, and most likely increase the size of the government, which is not a good thing, but we'll see. So in summary, inflation is here to stay. That's I don't think that's now. You have to be clear that, like, if you go to the supermarket, things are increasing in value, month by month. You can practically see it, but other things are going to come down. So it is inflation on one thing, some things, and not on the other. What's the danger with this? That the government might choose and pick which things to measure inflation by, to manipulate the data a little bit. So we just got to be watchful for that. Okay, and like I said, I do think that the housing market at some point will come down, but it won't stay down for too much. The stock market is inflated. And finally, I think gold and silver is what people run to when there's uncertainty. Okay, that's just human nature, and we've been doing that for thousands of years. And there's no reason why not. Right? We're not going to do that this time. So it's good to have some gold and silver in your portfolio. And like you saw one super extreme when that ticker was 30,000 per ounce, if you take into account all the M2 money and gold. But I don't think that's going to happen, but you never know. So the next part, I'm just going to give a few minutes on how one way to buy physical gold, you can hold it there by a third party. You can have it shipped to your house. So hopefully this helps, and thanks a lot for joining in today. Okay, so this is the website where I bought from. I don't endorse them. I don't represent them. I'm not getting any commissions from this. I just bought there, and and I had a good service, and I really liked the price. So what I like about it is I don't have to call and talk to anybody. I just go on the website and click like buying shoes, and that's it. So here on the top, you're going to see the strike price. That's the price right now at the market. For example, gold is 1,932. So of course you're going to pay a little bit more, right? Because above the strike price, and that's expected. Like for example, here you can buy this guy for 2012.79. So yeah, that's 70, 70, $80 above the strike price. Okay, so like if I like this guy, they have these bars and these coins, they're marked there, on the purity, and they come, with a nice little package. And in this case, this is from Australia. All right, and the one thing to note is that different way you pay is gonna be a little bit more or less. So the cheapest one is to pay with a check. So what I did is I finished my order, and then they gave me some days, I forget what it was, to mail in a check, a piece of paper. I did that, and that's how I got the lower price. You can pay with Bitcoin, you can pay with credit card, but it doesn't make any sense to pay with credit card. You're paying like $80 more per ounce with the credit card. So obviously you don't want to do that. Now once you buy this, there's gold, there's silver, and there's coins. There's different ways you can buy these little lingots. And one other cool thing is that they have a third party where you can go ahead and pay per month, and they'll still put it in a warehouse for you. It's completely insured. It's audited by a third party, and you have access to what you have there online. If you want them to send it to your house, you can go ahead and just tell them to send it. In a couple of days, you'll get it over. How much does that cost? If it's around $50,000 of metals, and it's like $15 a month, which is not bad, and that's insured. So yeah, I recommend you guys taking a look at a website like this. For me, it worked out pretty nicely. You can also have it shipped to your house, so it's up to you. All right, thanks guys. Thanks for watching this video, and hope you liked it. And if you did, please give it a like.